So welcome everyone. Can I just ask you, can you hear an echo sound or not?
No.
No, okay, great. Then I don't have to worry about it. In fact, let me just plug this in and then I won't hear it and then we can get going. Excellent. So welcome. This is what we call a power hour. So we're going to run through quite a lot of things in a very short period of time. I just want to quickly find out from everyone, if you can just give me a quick kind of 30-second elevator pitch of who you are. So I just, if you can just give me your kind of your name and then what do you do and what would make this hour the most useful thing for you. So if we can just quickly run through. So Adrian, first of all, yourself.
Hi.
Hi.
Hi, I'm Adrian Cohen. I have a skincare business called 𝐄𝐱𝐜𝐞𝐥 Cosmetics, and I'm about to start a new business called 𝐼𝐢𝐧𝐚𝐬𝐢𝐧𝐞, and finance always catches me. I just can't seem to get it. So I'm really looking forward to this and hope that at the very least, I walk away with a better understanding of my own business financials. And thank you very much for offering it.
Great. So when you say financials, is it understanding how the business works financially or understanding the financial statements?
Both, actually, understanding financial statements and how the business works. I have a mental block.
Okay, okay,
and
great.
I'm hoping that you can help me get rid of
I
it.
hope so too. All right, excellent. Let's see what I can do. Great, thank you. Dan. Dan Ehrman. Okay, let's move on to Ephraim.
Cool. Hi there, David, and everybody else. Yes, I'm a director at First Realty Company here in Melrose, and been to a few of these types of sessions, one or two courses. I got my BCom degree in IT, but always, I think it's always just good to freshen up on financial statements and all things finance in businesses. And so I'm obviously not an accountant, not a chartered accountant or anything like that. So always looking for new ideas that I might not be familiar with in regards to the accounting and finance space within business.
Fantastic. Excellent. Thank you. Thanks.
Sure. Thank you.
Let's go to Linda. Linda, are you with us? Okay, let's go to Odette.
Thank you very much for offering your expertise. There is a problem with customer satisfaction and happiness when it comes to electricity and water issues on a permanent basis, even if there are meters installed. And I'm looking for solutions around that in order to make people pay for their prepaid use. They're still not happy. So I'm not too sure what can be done in order to make customers more delighted about electricity and water. So that there's a steady flow of income coming in as opposed to what we experience on a daily basis.
Okay,
Thank you.
great. Thank you. And Filadi?
Hi, my name is Filadi. I'm a digital marketing intern here at 𝐁𝐻𝐺. So it will be an honor for me to kind of understand the finances as I see myself as someone who wants to be a business owner in future. Thank you, David.
Great, thank you, thank you. Let's just try again if Dan is there. Dan, are you there? Or Linda?
Hello, it's Dan.
Hi. Yeah.
Sorry, I couldn't find the right button.
Okay.
Just interested in broadening my knowledge on finance. I'm an accountant and happy to listen.
Okay. Fantastic.
Thank you.
Excellent. Thank you. And
Hi,
then
David.
Linda. Hi.
David, this is Karen. Linda has put a chat in asking she would like to understand how to correctly read financial statements.
Okay. Okay. Brilliant. Okay. Great. Excellent. So thank you. So at least I know who I'm talking to. And if you want to know who you're talking to, so as you know, I'm David Zidel, and I've written 2 books. The one book is on basic business calculations. The other one's just some life lessons. It's around lessons I learned through running that apply to business and life in general. I was lucky enough a couple of years ago to win the 𝐅𝐢𝐧𝐚𝐥 Mentor of the Year. And I'm involved in creating 2 business simulation games. The one's called 𝐁𝐿, which in Hebrew means great. Teaches strategy and finance, and the one we're just finishing off and running at the moment is a business simulation called 𝐁𝐢𝐧𝐚𝐴, which is based on using electric vehicles as the basis, but you learn around that about pricing. You learn or you make decisions as a CEO whether you should distribute throughout the world geographically or look at technologies, etc. So it kind of simulates business. But more on what we're looking at the moment. So if I had to show you something that says this, what can you read here? What does that say?
Information now here or information nowhere.
Great. So you've actually seen both. Most people see information nowhere, but you saw and you said, hang on, it might say now here. And that's the difference. Some people don't understand finance, and it's exactly as Adrian, as you said in the beginning, where you're completely lost with the finances. So you in that stage, you're the nowhere, and hopefully it's just a small change. And you made it sound like you've got a blockage, and it's not a blockage. It's just being able to be aware that you can change, and everything's there. It's just about where you look. Okay. And the important thing about it, when you're looking at business and you're looking at the numbers and you're looking at the finances, it's not just around understanding the financial statements. It's about understanding how your specific business makes money. What is the thing that you do that makes the money? Now, with some businesses are very obvious, with others not so clear. So for me, when I was listening to the introductions, the talk about the meters and getting people to be happy to pay for their meters, etc. So that to me wasn't 100% obvious. How do you make money from that? But it's not around me understanding it. Some people run businesses and they themselves are not 100% sure what part of the business makes money. And so that's what's important. So understanding from yourself, and maybe it'll become clearer as we go along. And then if you know that, then you can make business decisions that enhance your money-making ability. Then you can do more of what makes you money and maybe less of what doesn't make you money. Okay. Just by the way, anyone recognize the people in this picture? And when you look at this, some people have said, well, that's the young me and the old me. Well, half right, that is the young me. And that was the cover of the book when I first wrote it. And I'm with Stephen Covey. Stephen Covey wrote a book called The 7 Habits of Highly Effective People. It's a very, very good book to read. And I happen to be holding his book, and he's holding my book. My book over the years has sold about 25,000 copies, which sounds impressive until you compare it to his book. His book has sold over 15 million copies. Now, I'm not putting that picture just to show off. I'm putting it because Stephen Covey says this is how we learn. If you pick up a book and you read it, you've only got 10% of the knowledge. When you hear people discuss it, you've got a little bit more. When you see and watch other people doing it, it's even more. but it's when you start discussing it with others and when you start doing it yourself, that's where you learn the most. So a lot of things, a lot of people go in and they don't want to try something until they know it 100%. And that's not the correct way. The correct way is to know some of it, to discuss it with others, but then to start doing. And you learn the most by doing. When I swapped books with Stephen, I got home and I opened the book, and this was written on the cover of the book. And I don't know if you can read what that says. It says, "David, thanks for your book." And then I couldn't read what they were saying there. And my mom-in-law came to visit from Cape Town, and she couldn't read, and she asked me what it says. I said, I don't know. And she wrote to Stephen Covey and asked him what it said. And he wrote back to us and he said, "David, thanks for your book. You're a trim tab." Now, I didn't know what a trim tab was. And so we asked him again, what's a trim tab? And this was the message. The trim tab is the small rudder that moves the big rudder that moves the entire ship. And that was on page 32 of his next book, The Eighth Habit. What does that mean? One could look at this and think this is quite an insulting message. I'm saying, oh, you're just a little rudder. But that's not the message. The way it works on a boat is if you've got, there's so much water pressure that if the captain tries to move that wheel, nothing will happen. It's too much water pressure. It is only when he moves the wheel, it moves the little rudder. The little rudder moves the bigger rudder, and then that moves the whole ship. The message behind this, it's the small things that make the big things happen. So it's that small change in the trim tab that makes that giant ocean liner change course. And we need to remember that, because what that is saying to us is that sometimes things are not working, and maybe one or two small changes in the right place make it happen. And sometimes we feel like we're drowning. And you don't drown by falling in the water, you drown by not swimming. We are all going to, especially when we do things we're not 100% sure of, and that's what we should be doing when you're in business. You're not 100% sure what you're doing, but you learn as you go along. So all I'm saying with this and this message behind this is sometimes finance and other things in business might seem very daunting. But don't worry, sometimes something that seems insignificant, a small little change, can make a big difference. The idea is to keep looking for those little things and keep trying until hopefully you find it. So before we get to the actual finances, I want to ask you a question. So a businessman will buy a watermelon for €1 and sell it for €1.50. He's selling it for more than what it's costing him. My question to you is, how can he charge more for the watermelon than what it's costing him? Why would people be willing to pay him more than what it cost him? Just some ideas?
For ease of access to the
Ease
buyer.
of access? Okay, meaning the person wouldn't have to drive all the way to the farm.
Yeah, or all the way to the market. They can just nip to their closest store and find it there.
Excellent. So that's one. Any other comments? Why would somebody pay more? It would definitely be ease of access. What else?
Maybe he's cutting it up, preparing it so it doesn't have to be processed in any way before eaten.
Yeah, so maybe he's cutting it up. So it's slicing it. So maybe you don't want the whole watermelon, maybe you just want a part of it. And so he's giving you what you want. Great. Any other things? Any other comments? Okay, so maybe it's his expertise in choosing it. So when you buy from a particular person, maybe you know they've got a proper eye, and you know that it's going to be fresh, and you know that it's going to be the best watermelon. And so these things that you've mentioned, ease of access, maybe slicing it up, or that you know it's good quality, we can put all of that under a heading. And the heading and the word for that is added value. And every business and any business, what people are paying you for is added value. The reason why they're buying from you and not someone else is added value. That's why price is only applicable when people don't know the difference between you and your competitor. If it is a commodity, if it's something where there's no difference in the product or the service, then price is crucial. But if it's something that can be differentiated, then the added value is crucial, and people sometimes pay more for the added value than the product itself. The added value can be anything. The added value can be, I just feel secure working with you. I just feel like I don't have to worry. That's added value. And that could be massive, depending on what it is. People who take out funeral policies, by definition, never get to see the service actually delivered. So what are they buying? Peace of mind. They're buying the belief in you. And if they don't believe in you, even if your product is the best in the market, you're not going to get the business. So for whatever your business is, if it's skincare, or if it's realty, or whatever it is, or ask yourself, what are you offering? And try and find something that you can offer that isn't generally being offered in the market. And then realize that it's about price. So when people start saying to you, oh, can you give it to me cheaper? Or, then at least you can say, but it's not just the product. You're getting this, 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 and this, and know what that added value is. Okay. So this is how a businessman does it. Takes a watermelon, sells a watermelon. He's buying a product, selling the same product. What does an entrepreneur do? Entrepreneur takes the product and changes what he's delivering. So besides all the other things that we've just mentioned about added value, he could buy a watermelon and then sell you watermelon juice. And now all of a sudden, instead of charging €1.50 for something that cost him €1, he can now sell it for €5, a lot more. Because it's no longer, although it's linked, it's still the same product in a different form, but it is a different form of the product, and now it's got its own price. Important with that, you can see how beautiful this watermelon juice looks here, and it's got a nice little umbrella. And somebody might say, but that's wasted. Why put an umbrella in there? No one's going to be drinking this when it's raining. Why do you want a little paper umbrella there? And the answer is, if I gave you the exact same juice in a dirty, crushed up glass or crushed up cup, that it looks like someone else has had something to drink out of it, or I gave it to you in a beautiful glass and with the ambience around it, then it doesn't change the taste of the juice, but it changes the juice taster. When you feel better about receiving it, you feel like the product is better. Some companies will do that by the way they do the packaging. Apple, for instance, when they sell their products, any of you have bought any Apple products, they've got this, when you open the box, they've designed it that it actually takes exactly 7 seconds to actually get the box open. Because they're trying to do it like a magic trick with a reveal. So the suction, they put the suction that you can't just take the lid off. It takes some time to get the lid off. And that's the reveal. And it just creates something different. So whatever you are doing, continuously ask yourself, what is your umbrella? Besides the value add, what are you adding as well that makes your product different, that makes it to the person who's buying it feel like they're getting just a little something more? And that little more doesn't have to be anything major. It can be like on this, the little wooden umbrella that costs 20 cents. Maya Angelou said, a person might forget what you said, but they won't forget how you made them feel. Are you making your customer feel valued? Okay. So that just a little bit of kind of business acumen and sense before we've even got to the financials. But don't worry, I'm going to get to some of the financials now. So I'm going to take you through a little bit about understanding income statements, some very basic stuff around ratios, and do you have the ability to tell your financial story, maybe through financial dashboards? If you're watching a game of sport and you're watching two soccer teams playing soccer, how do you know who's winning? How do you know which team is winning?
Team that scores goals in and kicks the ball into the goalpost.
So first of all, yes, Lisa, it's a team that scores the goals. But then if you come, you've got a kid who's playing soccer and you come a few minutes late, how do you know who's winning after the game has been going for 15 minutes?
You look at the scoreboard.
You look at the scoreboard, absolutely. Ephraim, absolutely. There's a scoreboard telling you what has happened. The financial statements of a business is the scoreboard of the business. It's telling you how many goals you've scored. Now, those of you who watch soccer and who've watched Bafana, if you looked at the stats of how long they were holding the ball, they were holding the ball more than the opposition, most of their previous games. They used to kick the ball from each other all the time. They forgot that the purpose is to score a goal. That's why it's called the goals. So they had more possession, but less goals. They get you rewarded. You get rewarded for scoring more goals, not for possession. Likewise in business. You get rewarded for making more money, not just for being busy. And unfortunately, a lot of people are in busyness, not in business. And you need to ask yourself, are you in business or in busyness? Are you busy, which is important to make money, but some people are busy and still not making money. And maybe they're just too busy doing part of the job, but not the main part that brings the business in. As you might know, I do some of the talks of in the boardroom at 𝐅𝐢𝐧𝐚𝐥, and I interviewed, I think it was Clive from 𝐂𝐲𝐿𝐴𝐻 Venture Partners, Clive Butko, and he, in one of the talks, said, you got to spend 50% of your time developing the product, but 50% of the time selling. You have to be selling your product. You have to be talking about your product. Okay. If you look out there and you look at the banks, I don't know if you notice the banks and their slogans, but ABSA's got a slogan at the moment that says, your story matters. And I want to change it slightly. I hope they allow me to be, your financial story matters. Because your financial story is around understanding, are you scoring the goals that you're meant to be scoring? There's a little bit more around just the story, because when you've got a business, people are buying your story as well. Do you have a story around your business? They did a very interesting thing. They did an experiment where they gave people little tzatskes. So they gave just little things that they could buy. And they took 20 of these things and they had two websites. And the one website says, you can buy this, I don't know, this toothpick, and you can buy this coin, and you can buy this token, whatever it was. And they had all these things. And they were selling for $1, or they said to people, what would you pay for it? And people said, $1, $2. They had then another website where they had the exact same products, but a story behind the products. So they said, this is a toothpick, and David Zidel used it to pick his tooth while he was at the APSA award dinner and whatever. And I mean, they made little stories or ridiculous stories. And I can't remember the exact number, but it was if my memory is correct, about 20 times. The price was 20 times. So people were now willing to pay $20 for something. And the only difference was it had a story attached to it. Now, we're not so big in South Africa with it, but in America, they trade these baseball cards, and the baseball cards are based on different people's personalities, and it's just a piece of paper with a picture on it, but it's got a story attached to it. So I'm not sure if it's relevant to all businesses, but if it's relevant to your business, then see, can you attach a story to what you've got? Then you're selling the product, you're selling the story of the product, and you're doing it in a way where you're adding value in ways that is not just the product. And in that way, you can get the money that can help you grow the business. So when we talk about this, and when I did the intro, some of you asked and mentioned about the finances and understanding it. So let's get a little bit into that. So just a little bit around understanding an income statement and what an income statement is. In the most simple form of it, all an income statement tells you what's your sales or your revenue. You then take off your cost of sales. Now, your cost of sales is the cost that is directly related to that revenue. That gives you something called your gross profit. And then we take off your expenses and you're left with your profit. Now, somebody might say, well, I've got my sales and I've got a whole lot of expenses and then I'm left with my profit. Why do I need all these subtitles underneath? And the subtitles can get a little bit more. For instance, like this, it's showing you starting with a big block and then it's getting smaller and smaller and smaller, and you're taking off those little bits in between. And the answer for that is for analysis purposes. So if I'm going to go back to this slide, let's put it this way. Your gross profit is what you're left with after the direct cost of the product that you're selling. There are different business models, different types of business that determine what that gross profit is. And I want you to look at this and then ask yourself, your business, what type or where does your business fall within this? So if you go and you fill up with petrol, well, let's say not even fill up, you go put 100 Rand of petrol in. How much of that 100 Rand do you think that the petrol station gets? And the answer is they only get 6 or 7 cents. They only get 6 or 7 cents of that sale of 100. So they're getting 6 or 7% of the sale. The other business, you go to a restaurant, you order a salad for 100 Rand. How much do they keep of that? And the answer is they keep it about 65 Rand out of that. So the actual ingredients in the salad is about 35 Rand. They keep 65. Now, based on that, you might think, wow, so the restaurant must be making an absolute killing, and the poor petrol station's never going to survive. They are different business models in that the petrol station survives, even though it only makes 6%, because it's what we call a volume business. They sell lots and lots and lots of liters. And so they make lots of 6 cents. The restaurant also sells and makes more, and they'll make more money the more they sell, but they don't sell the quantity of salads as a petrol station sells of liters. And so it's quite important for you to see in your business, are you what we call a volume business or a margin business? And if you're a margin business, you need to make sure that your margins are big enough to then cover all your costs. And some businesses stay like that. Some of them swap from the one to the other over time. So an example would be Woolworths. Woolworths selling clothes. They generally a margin business. Sometimes they will drop their margins so that they can increase their volumes. So they will go on sale and they will drop their margins so they make less money, but it's only worth them doing it if the volumes go up or if they've got another strategic reason for doing it. So they would go on sale because then they would sell more, or they would go on sale for their strategic reason might be that they need to get rid of the old stock and get some money in so they can buy the new stock. Okay. So again, worthwhile understanding what type of business it is. Just to understand this, maybe a better way is to look at it in terms of this. Your sales is like a big bottle of wine. And before you can drink it, let's say you got to pour it into a funnel. And unfortunately, there are holes in the funnel. And a lot of it leaks out. Where's the leakage? It's the cost of buying the stuff. It's other expenses, running expenses. It's taxes. And then you're left with a profit at the end. And hopefully you can see that the profit is that little drop at the bottom. What people don't understand often, especially in small businesses, is that people think that their sales is their profit. And then when you say, how well are you doing? They will say, we're doing great. We got like 100,000 rands worth of sales. Yes, your sales are important, but your profits are more important. How much of that 100,000 are you actually keeping? And sometimes it's not even a nice number to look at, because if you look at the 100,000, you feel great. But if you look at the 10,000 you're left with, you don't feel that great. But it's important to focus on that. There's a saying that a businessman once said. He said, if all you talk about is sales, then that's like sales is vanity. It's like showing off. So if I make 100,000 rands worth of sales and someone says, how's business going? And I say, it's fantastic. Got 100,000. That's vanity. That's showing off. Profit is sanity. So your sanity is the 10,000 that you're making at the end. That's really what you've got. Everything else is the costs involved in getting that. So you have to focus on it. So turnover is vanity, profit is sanity. And then there's one extra line which says cash flow is reality. Now, some businesses make money but still go bankrupt. And you ask, how can you go bankrupt if you make money? It's because you run out of cash. So if you're getting money, you're making sales, but now people owe you the money. That is your cash flow. You haven't got the cash flow to continue. And I generally find the smaller the businesses, the more an issue this is. And the reason for that is that if you're in a bigger business and you have cash flow issues, you can borrow money from other parts of the business. Where if you're a smaller business, your cash flow is crucial. So let me just summarize what I've just said again. When you look at your income statement, it's like a funnel that's funneling down. You have your sales amount. Then you take off your cost of sales, you're left with the gross profit. Remember, the cost of sales is the cost that's directly related to the sales. You then take off all your expenses, you're left with a profit before interest and tax. Then you pay your interest on any money that you've borrowed, and you're left with profit before tax. You pay tax, you're left with profit after tax. You might have shareholders that you pay, so you pay a dividend, and then you're left with what we call retained earnings. And that's your bottom line. And hopefully what you can see is that it gets smaller and smaller and smaller. And it's just important to be aware of that. That is your most basic 101 of an income statement. Now, I'm not going to go into too much detail related to a balance sheet, but just a one-off thing with a balance sheet. All a balance sheet tells you is, what money did I get into this? Did I get into the business? Was it money that was invested in the business or money that was lent to the business? Money invested is what we call equity. Money lent is called debt. The debt, you pay interest on that money, and the equity, they share in the profits of the business. But your balance sheet, all it really says is, where did the money come from? And then what did I do with that? In other words, if I got R1 million into my business and all I did was put it into the bank account, it would say, where did the money come from? It came from here. Where's it sitting here? It's here. It's in cash. And they equal. That's why it's called a balance sheet. It's in balance. And then this just looks at where the money's sitting at any one time in the business. And so, is your money sitting in cash? Have you got more assets? Do people owe you? Do you owe people? Etc., etc. So all a balance sheet is balancing the money coming in and the money that, and what are you using that money for? Okay. That's kind of the most simple form of looking at a balance sheet. Any questions so far? Or maybe let me run through this and I'll leave about kind of 5 or 10 minutes that if you have any questions. So I'll just run through the presentation. At least we'll get through that, and then I'll open it up for any questions. So one of the most important calculations that I think anybody in business needs to be able to do is to calculate a percentage increase. I have over the years seen lots of people don't know how to do those calculations. They don't know how to calculate a percentage increase. So I'm going to take you through doing this calculation. So in fact, maybe let me see if I can stop this presentation, and I'm just going to pull up a spreadsheet. Not that. Let me get. And let me just see if I can bring this in. There we go. And so if I've got sales, let's say I've got some sales for the first year. And then I've got for year 2. And let's say my sales was 145,000. Yeah, 145,000. And then that it went to, let's say 195,000. I want to know, and I'm going to ask you to try do this calculation quickly yourselves, get a calculator or something. Just calculate what you think the percentage increase is.
%26.
Okay, you got 26%. Okay. let's have a look and see. So what you do, there's just a couple of steps. You take the difference between the two. How much did it go up? So you take year 2 minus year 1, and it's gone up by 50,000. And then you take the 50,000 and you divide it by where you started from, because it's an increase from there. So if I do that, in this particular case, I don't get 26%, but I get 34.48%. If I took that 50,000 and I divide it by the 195, that's where you get the 26%. But that's not, and this is a very, very common mistake that people make. And so the important thing is to understand kind of what, how to calculate a percentage increase. I'll tell you two little things with it, because that calculation, the 26%, is correct in a different circumstance. So I'll come to you with that. So first of all, when you're doing the calculation, those are the steps. So if I go back to my presentation, it says, calculate the increase or decrease amount. What's the difference between the two? Say, where did we start from? We started at year 1. You divide the difference by year 1, convert it to a percentage by multiplying by 100. Okay. Now, where I said it's similar is if I've got my cost plus my markup equals my selling price. If my cost was 200 and my markup was 50, my selling price is going to be 250. If I now do it in the income statement format, where I say sales minus my cost of sales equals what we call our gross profit. Remember, with that first bit of the income statement, my sales is, let's say, my selling price. If I'm only selling, let's say, one product, my cost is that 200. The difference between the two would be 50. Now, with this over here, if I take the difference between the two, using the words that I said, which was 50, so if I'm going to go 50 divided by where I started from, which is the 200, that gives me 25%. This is what we call the markup percentage. This over here, where I take the difference between the two, which is my 50, divided by where I started 250, that gives me 20%. And this is what we call our gross profit percentage, or our GP percentage. So the answer that was 26 might be looking at it like this, but just in terms of this, it's important to understand, are we looking at markups or GPs? But this little discussion over here is, I wasn't going to go into this, but it's on a sideline of the discussion. The important thing is to understand this little bit over here, which is talking about your percentage increase. Okay. Where this relates to is if you're looking at a budget, if you're looking at your budgets, you start off by a budget, you create a budget, and then you have what we call your actuals. What actually happened? And if my budget was 145 and my actuals was 195, they would use the words like the difference between the two, which they call the variance. And your variance would be that 50. And then what's your variance percentage? And that would be the difference between the two divided by where you start from. And so that would give you that same 34%. Okay, so it's the same calculation that repeats itself in different places and different ways. But at the end of the day, the important thing to understand, and hopefully this is kind of the lesson that you get, is important to be able to calculate a percentage increase. What's the difference between the two? Did it increase or decrease? Where did you start from? Divide the one by the other and convert that percent to a percentage. Okay. I'm hoping I'm not confusing you too much with this, but that's the one thing. The other thing that is crucial in a business is to be able to do ratios. And ratios is just looking at one thing in proportion to another thing. Okay. So you divide one number by another number. And it's important to be able to do that because it's telling you relatively what's happening. Even this is a ratio of your gross profit percentage, is a ratio of what your profit is. And you need to know what in your type of business is important. You need to look at your business and say, what is the most, or what are the most important things I need to look at in terms of ratio? You could look at how much time I'm spending on different things. You could have a look at what things am I doing that are giving me the best results. It's been proven over time, something called the Pareto rule or the 80-20 rule. We generally earn 80% of our income from 20% of our customers. So find out which are your customers and try do more of that. Interesting, it matches in different areas as well, is apparently someone said if you look at your cupboard and the clothes that you wear, you'll find out that you wear 80%, you wear 20% of your clothes 80% of the time. Some of the important ratios that we're talking about is, as I've shown you, your gross profit percentage, or even your net profit percentage. You need some form of ROI, return on investment calculation. You need to be able to see how much is it costing me, what am I getting back? Rule 101 in business or in anything related to business is you have to know what it's costing me and what am I getting back. And you need to understand that your profits have to be greater than your costs. Otherwise, the busier you get, the poorer you get. Whatever you're deciding to do, you need to make sure that that income is greater than what the costs are. And some people don't include all their costs, and that's where they go wrong. They only look at the direct costs, but it's all your costs of running your business in doing that. So you need to look at your specific business, and you need to be able to look and say, what is adding value to me? And so I always say, you got to know what to focus on. What is your focus? And part of that focus is sometimes we look at the very minute things and sometimes we focus out. If I asked you, what does this look like? Some of you most probably will say it looks like a fish eye or something like that. If I zoom out a little bit, looks like that, maybe we're not sure. If I zoom out even more, you can see that this actually is a bottle and we're looking at the bottom of the bottle. What am I saying with this? Is that it's important to see what you focus on, but it's important also to zoom out and understand the bigger picture of what's happening. Don't only look at what you're looking at. So for instance, if you're in the real estate business and you're looking at your salespeople and you're looking at how many sales you're making, yes, that's important, but have a look at the whole market. Is the whole marketplace, are people buying or they're not buying? You could be doing the absolute right things and your sales could be worse than last year. Got nothing to do with you. It's got to do with the economy. It might be just before elections and people are worried about who's going to be taking over. So again, it's important to look at your own business minutely, but also to focus out. And then I'm going to just a couple of more minutes and then I'll open it to some questions if you've got questions, but I just want to tell you a short little story. So what I used to do is I used to take some students overseas on trips, MBA students, and we used to visit different companies, and this is Starbucks in America. This was at their original store. In fact, it's quite interesting. Go in and they're still selling the original cups and everything. And this was in Seattle. And if I said to you, what business is Seattle in? And you'll tell me, David, well, that's a stupid question. I mean, there it says Starbucks coffee. That's obviously coffee. And their CEO, by the way, they've just changed CEOs now, but their CEO, who started and ran it for a long time, 𝐁𝐻𝐧𝐚𝐧𝐿𝐻, said they're not in the coffee business. He said, we are not in the coffee business serving people. We are in the people business. We just happen to be serving coffee. And you can look at that and say, but that's the same thing, but it's not. It's where is the focus? And it goes back to what I said in the beginning of what's that added value? Do people feel appreciated? Do people feel like you're serving them? Are you serving them coffee or are you serving coffee to them? What's the focus on it? From the outside, it looks like the same thing. On the inside, it feels very different. Okay. And that's why when you go buy coffee from Starbucks, for instance, they write your name on the cup. Why? Not just to identify you. It's so that you feel special. Where you're sitting there and all of a sudden they call out your name. David, your coffee is ready. Makes you feel special. Are you making your customer feel special? So that's the end of the formal presentation on what I wanted to share. So I just want to ask, is there anything specific that anyone got any questions? We got kind of 8 minutes, 7-8 minutes left. Anyone got any questions that you want me to try, answer, or discuss?
David, I'm just thinking not only for product, but for services. I don't know if you can share anything along those lines, and just in any respect of concerning what you've shared up to now. Thanks.
Okay, so Lisa, just clarify that with me. What?
So, for instance, so I've got a legal background, so I charge so much per hour for contracts or to do legal work. So just yeah.
Yeah. So just from a services type and from service type companies, it's so you don't have cost of sales per se. So your cost of sales would be smaller, but you would have all sorts of other expenses that you would need to incorporate. And then also you'd need to look at it from, so if you're looking at I don't know if you're looking from a pricing point of view, but you'd need to look at the same type of work and see what is being charged in the marketplace for the different things and at what price can you do it. And you would have other costs that you'd need to take into account of, you would need to bring in kind of your rental and your marketing, and also you would need to be able to compensate yourself for the opportunity cost. In other words, if you weren't doing this, you'd be working for a company, and what would you be earning there? And kind of from a pricing point of view, that's how you would look to price it.
Thank you. Thanks very much.
Any other questions or comments?
It's
Yeah,
not really
Adrian?
a question, but a comment maybe to 𝐁𝐻𝐧𝐚𝐴 is, I would really appreciate it if we could do more in depth around the income statements, if that's a possibility ever. Thank you so much for a very, very interesting and valuable session.
Right. And Adrian, if we do get something like that together where we'll go into the income statements, it might be worthwhile for it to be run almost like a consulting way, where we'd look at your specific, if you're happy to do that, specific income statement, so we can explain almost your income statement to you. Yeah, that might be useful. Right. I feel like I've been a little bit like a runaway train, that I've just run away with this and gone into different things. I hope it hasn't been too much like that. I hope you don't feel like you've been run over by a train, but it's just to get through some of the basics in the time that's available.
Thank you, David. I think it's been amazing. And not only have you included the financial element of everything that you wanted to cover, but further introduced the whole concept around the behavioral economics, going from, the information now here to nowhere, right up until the end, where the focus is on the zooming out to see the bigger picture. So it's been absolutely incredible. And I'm sure every single person on the call today gained deep insight into the whole demystified financial element of business. Adrian, we certainly will arrange something for you and David. So thank you for that. And from my side, David, as always, thank you so much for your expert, amazing facilitation. We're so grateful for your time. Not only did you spend Sunday with us, but Monday as well. And thank you for that. Before we close off today, we are going to put up our feedback poll. Just a couple of very short questions, which we would appreciate you answering. And David will share his slide deck with me, which will be sent to you together with a copy of the recording and Power Hour Bootcamp summary. So thank you everyone for joining us. Please remember, we have How to Sell on Takealot tomorrow at 1 o'clock online with 𝐅𝐢𝐧𝐚𝐧𝐜𝐢𝐴. So I hope you can all join us for that tomorrow. And we look forward to seeing you then. Bye, everyone.
Thank you, everyone. Thank you.
Thank you.
Thank you very much.
Great. Thanks, Odette. Thank you.
Thank you, David. Appreciate it.
Thank you very much.
Thank you.
Thank you, David. It was very interesting. Much appreciated.
Great. Thanks, Dan. Dan, are you related to Kevin?
Yes, I'm his father.
Oh, okay. So quite closely related.
Yeah,
Okay.
as close as we can get. But thank you. I found it very interesting.
Okay, that's interesting that you found it interesting, because I mean, this is your game. So
No, but it's a good refresher course, if you know what I mean. Really going down to basics. I found it very relaxing and informative. Thank you.
fantastic. Thank you. Thanks, Dan.
Okay, take care. Bye.
Bye-bye.